We are about to kick off the first full week of July. Pay attention. July 6th is going to be the most mechanical institutional event of the entire SPCX story. SpaceX officially joins the NASDAQ 100. If you didn't know, that's the index tracking the 100 largest non-financial companies on the NASDAQ. So, SPCX, joining the NASDAQ, will trigger $4.3 billion in forced buying from QQQ. Now, if you don't know, that's the Invesco QQQ Trust, a $495 billion exchange-traded fund, ETF, that tracks the NASDAQ 100 plus. There will be buying from QQQM, TQQQ, and every global fund benchmarked to the index, totaling up to $27 billion in mandatory purchases. Here is the critical flip side. To buy SPCX, every one of those funds must simultaneously sell proportional slices of Apple, Nvidia, Microsoft, Amazon, Alphabet, and Meta to raise the cash, meaning the stocks you're already holding are being algorithmically trimmed Monday morning with zero human discretion involved. SPCX currently trades around $162, which is up 20% from its $135 IPO price, which has already potentially triggered the performance-based lockup condition written into the prospectus, meaning when SpaceX reports its first-ever Q2 earnings in late July or early August, up to 30% of currently locked insider shares become eligible for sale. Now, if you didn't know, Q3 2026 kicked off July 1st, and the new Fed Chair Kevin Warsh hit the podium 2 weeks ago leaning hawkish, meaning towards rate hikes rather than cuts, forcing folks to balance some things against a rate environment that has not been this uncertain since 2018. Did you peep the corporate buyback play? That's when companies repurchase their own shares from the open market, reducing supply, supporting price. This play is running at the strongest pace ever recorded, folks having authorized over $865 billion in share repurchases year-to-date, putting the market on pace to exceed $1.5 trillion by year's end, with technology and financials accounting for 57% of all announced buybacks, meaning the single largest structural buyer in the market is actively working beneath the market on some things, and it does not get talked about enough. The bottom line is this. This week has three simultaneous forces operating at once. First, $27 billion in mandatory SPCX index buying pressuring. Second, over a historic $865 billion corporate buyback program supporting prices from below. And third, the 3-week countdown to the first SPCX insider selling window. That will be the real stress test for whether SpaceX holds its gains or hands out early profits back to folks who understand patience, pay attention,